Dipan Mehta is with us, Director, Elixir Equities. Dipan, good morning. Good to have you with us here. I won't ask you about the budget because there's so much else to talk about, which is numbers, right? And let's just start with IndusInd Bank. Quick view, Dipan. Numbers are bad, but they were expected to be bad. The question, though, is, will the markets look ahead a little bit? Price to book 1 year forward, 0.9 times. Compared to about 2 times, which is the average over the last 10 years. Just your thoughts.
Yeah, Prashant, good morning, and thank you for having me on your show. I think that the valuations have got hit purely because of the way they have conducted the business last 2-3 years or so. Since Mr. Sopti's exit or around towards the end of his tenure, we saw the NPA starting to spike up in IndusInd Bank. And if you compare IndusInd with all that's the peer group private sector banks, the lending model has been far more riskier. They focus on microfinance, they focus on the vehicle finance business. And those are the differentiating factors which have led to the situation which they are in. And I would say that, first, the disclosure that we are investors in the stock, so extremely disappointed with the numbers. But I think even at these levels, does it make sense to invest in the company? The time to sell perhaps is gone. And what I've seen with such banks is that over a period of time, it starts to come back. They improve the lending standards. The NPA provisions do come off. And then you can see a surge in the stock. But every rally, I think, if the stock goes up 30-40% on improved numbers, all those rallies and upsides should be exit opportunities. End of the day, I'm not sure it's such a great bank as compared to some of its peer group. No differentiating factor at all. Growth rates also slower than the industry.
Okay, that's not a flattering set of numbers at all. Dipan, anything in the... well, first, good morning and thank you very much for being bright and early for us on a Saturday. Any of the banks now become attractive for you?
Good morning, Latasi. First of all, my view on the banks is steadily getting negative. I mean, I'm pretty certain that 2025 you may see a nice trading rally in banks, and the RBI will do something which will benefit the banking sector, and it will be an outperforming sector. But when I look at a 3, 5, 10-year type of a view on banks, I want to be almost negative to neutral weight on the entire banking sector. And the reason for that is extreme competition. What we are seeing is a complete red ocean over here in the banking sector, and that's leading to these banks doing these kind of lending on the unsecured side, be it microfinance, credit card, or personal loans. And then the problems start after 2-3 years of such lending, which suddenly lead to spike in NPAs. And now I think almost all banks are on a level playing field in terms of technology, distribution, products, manpower. So from that point of view, I'm not that positive on the medium to long-term trends of the banking industry. Having said that, I think there is still some trading play value in the PSU banks. I mean, I can't believe after so many years, decades, I'm positive on PSU banks, especially tier 2 PSU banks, the likes of Bank of Maharashtra, Punjab and Sindh Bank, Central Bank, Bank of India, Bank of Baroda. I think all of these traded at a discount to SBI. Their internals, financial and non-financial certainty have improved. Balance sheet quality has improved. They are back in the lending game as well, and they have invested a lot in the technology platform. So within the banks, if you want to remain invested, which you should, because it's 25-30% of any benchmark you track, a large proportion should be in the public sector banks. I think the differentiation and the kind of we had this private sector banks doing exceptionally well compared to PSU. That argument is fast fading.
Okay, and that's a longer term call you're taking, highlighting issues which are not just cyclical in nature, but perhaps structural, and competition is one of them.
That's right.
Got it, Dipan. That's an important point you've made. We'll keep that in mind. I want to draw your attention, by the way, hi, good morning, sorry, apologies for that. I want to draw your attention to Hero Moto. Given the management changes that were announced yesterday, now we know that Mr. Gupta, Niranjan Gupta is stepping down, and insider is going to take over in the interim. How did you view this? And I mean, in general, what's the stance on the company and the stock?
Hey, Shilpi, good morning. The stock is cheap, no doubt about that. The return ratios are great. But end of the day, I think that it's not delivered the best of returns over the last several years or so. And other companies like Bajaj Auto, Eicher Motors, TVS have delivered far better at various points of time, although not together. And also within the two-wheeler space, it's getting a bit crowded over there, and they have this massive disruption coming into play in terms of electric vehicle, rather EV scooters. And Ola Electric is acting as a big disruptor over there. All of these companies also have their strategies, but these products have lower operating profit margins compared to the traditional ICE engines for them. So from that point of view, I want to be slightly cautious on the two-wheeler side. And as I said, Hero MotoCorp is cheap, but within the entire space, our favorite still remains Eicher Motors, which is not impacted as much by the trends in EV. And I think after a long time, Eicher seems to have got its export business right, and the distribution also is playing a key role. Having said that, it's a company in which we are invested.
Got it. Just a couple of more names quickly, Dipan. The specialty the chemical space, if you will. Pankaj Tibrewal 2 days back talking about bombed out space. He said, well, keep an eye out on these. UPL reported numbers, the guidance, etc. Stocks rallied. Naveen Fluorine reported a decent set recently. Any thoughts there?
Prashant, you're right. I've said it before. I think I'm surprised, and we are seeing a cyclical upswing in specialty chemicals. Last 2-3 years, they went nowhere. Base effect also benefits these companies. I think we ourselves are looking more closely at that sector. Some winners and outperformers will certainly emerge from that.
Okay. What about Vedanta, Dipan? That's the other one. There will be interest in terms of, the numbers are numbers, but they've also kind of put forward that entire demerger process by a couple of months.
I think it's a great trading play. You buy the consolidated entity. I'm sure once they get listed separately, the value of the separate listing will be higher than the consolidated entity. So from that point of view, I think with a holding period of 3-4 months or so, there's scope to make a good return in Vedanta.
Okay. Vishal, Megamart, Dipan, any thoughts? It's not done anything after the listing, but numbers came through.
Yeah, I think very impressive set of numbers, 10% type of same-store sales growth, so very impressive, and a lot of sales coming from apparels as well, and right positioning in terms of tier 2, tier 3, from that point of view, good runway, reasonable valuation compared to its peer group, so I think it's worth a look in. I'm not gone that deep into the company, but certainly these numbers are an eye-opener.
And
what
about
Dipan, one minute, do you think the stocks that have fallen enough, Cainswell, Paytm, Zomato, and more importantly, Trent, used to be such a darling. They've all fallen like 35-40% in a month. Any of them becoming...
Yeah, that's right, Lata. But, in markets like this, you're very uncertain whether if the markets drift lower, go lower, then these are the same stocks which will be targeted more because they still trade at very rich PE multiples. So from that point of view, I just want to stay away. I think let's see how the market evolves. And I would just say that I was just reading through the news. More importantly, today is what Trump action is going to take on all these tariffs, So it's like a budget for US as well, I think.
Yeah, but that's only on Canada, Mexico, and China. So I guess we're going to be spared today.
Absolutely. Just about tariffs, etc. Names like Vari, Premier Energies, these solar names, there is some expectation that there'll be a basic customs duty imposition on import of solar wafers. Dipan, do you like these names? There's no doubt that growth will be super strong. It's about valuations. Your thoughts?
No, Prashant, I think that I'm getting very positive on these companies, and valuations also coming into that sweet spot, especially Vari Energies. Sure, I think there could be a knee-jerk reaction if there's tariffs on solar modules, etc. But these companies would work around it. Other than that, ex-US also, the market is huge for them. And these companies are getting very good scale, backward integration to improve their margins. Only fear is how much is the overcapacity which will actually happen. Let's, it's a good trend investment theme to track closely and understand it and invest in.
And Dipan, what about good old consumer stocks? Yesterday was the first sign of some life, and we got decent numbers, right? Nestle, Marico, volume growth was not too bad. And we know they've been completely bombed out, beaten out. Now, let's see what happens today. But if at all you look at FMCG and staples, will it only be a tactical short-term trade, or do you think there's some merit in adding them to the portfolio now?
No, Surbi, any upside in FMCG is a great opportunity to exit zero in FMCG is what I would say from a portfolio perspective. So don't get drawn into such rallies on the buying side at all. And a lot of investors have been investing in these stocks for decades and generations. I think any rally is a great opportunity to completely exit out of the sector.
And why do you say that? Because you feel that valuations are still high and growth will be anemic? I mean, what's the rationale?
A lot of products have reached mature category. They have not been able to sustain even high single-digit growth rates. And from that point of view, I think forget about the valuation. If you don't see growth, you have to get out of the stock.
You know, this stock.
Dipan, what are you buying now? An incremental 100 rupees, where would you put it?
No, nothing.
Oh,
Nothing.
cash. Stay in cash.
Waiting for this budget, waiting for this earnings season to get over, waiting for the Trump announcements to be over and done with, and the RBI policy, and then I think we can, look at
Trump announcements, Dipan, Trump announcements are not getting over. All the other events they have a exit date, a sunset date. Trump announcements, I don't know, not too sure.
Next 4 years, right?
Next 4 years.
Dipan, just a couple more names. I don't know if you looked at this name, Blue Jet. Reported number. There is some institutional coverage as well. I mean, super 90% growth in earnings, 600 basis point improvement in margins. Any thoughts?
Yeah, that's right. Even I was very surprised with the earnings, and they're getting into this API and contract manufacturing, and that new division has done exceptionally well for them. I just want to understand the sustainability of this particular division, and maybe you should call the management and understand what something new is happening over there. And how sustainable is it, or is it like kind of a one-off? Because the existing traditional business, I think, which is contrast media and other similar chemicals, that I think is not growing at that. It's typically at 8-10% type of growth rate, but some new products, I think, on the oncology side and some of the other very interesting therapeutic segments, they have launched some products over there. So it could be a good investment idea. I think one needs to dig a bit deeper.
Dipan, one infra name, because they will increase infra expenditure. Execution and spending is a different matter, but when you get that number, I suspect there will be some excitement. But out of that infra pack, anything looks interesting. L&T reported good numbers. Everyone keeps underestimating them, they keep beating. At least that's the story last few quarters. But what's the play here? Could be power, infra, roads, whatever.
I'll give you two names, Afcons and L&T. I think if you want to play the infra game now, at least you have something for some more names as well. And I think even ITD cementation post-acquisition by Adani, those prospects of that company may also change. It may go into a growth phase company in which we and our clients are invested in. I think see what happened in cement. If you look at the entire cement space, ACCA and Ambuja did the best amongst the cement companies, and that would be the Adani touch. Something similar can happen in ITD as well.